The Morgan Report with David Morgan.
David Morgan of themorganreport.com for the week ending 13 May 2022. Well, quite a week, especially for the crypto world, which we'll get to in a moment. I want to bring your attention to our landing page. The greatest wealth transfer in history is starting to unfold. That is a fact. Are you going to be sitting on the sidelines or take action? Many of you have probably taken action, especially those that are in the crypto space, and yet that certainly hasn't held up very well. And I will admit that the metals have not held up well. Everything is down: real estate, stocks, bonds, cryptos, you name it, everything's getting hit. It's sort of who loses least comes out best. And what I mean by that is in the financial crisis of 2008, gold was off 30% and silver has fell more than half. But they're the first to rise from the ashes. Gold doubled or did a little better than a double. Silver went up over 500% from the bottom. I'm not saying that's going to happen again, although it could, and I do believe something similar will happen. In fact, as things really percolate along, we could see them actually do better than that. In other words, you could see silver go up maybe tenfold. You could see gold maybe go up fivefold. Don't know. What I do know is that relative to other sectors, the metals are actually holding up well, meaning losing less in percentage terms and less in percentage terms relative to what happened in 2008. Does that mean I'm calling a bottom here for gold and silver? The answer is no, but we're getting close. And I think we've got a few weeks, months left before we know the exact bottom and start to work our way higher, but it's certainly a time to start nibbling at the market as far as I can tell. There are lots of reasons for the gold price moving up or down. I mean, it moves up because there's more buyers and sellers, and down because there's more down because there's more sellers and buyers, or up because there's more buyers and sellers. It really is that simple, but the dollar accelerates at the slide in the metal. Dollars hit a 20-year high. I think most of you that follow me know that dollar certainly is inversely correlated to gold most of the time, but as I've said many times, at the end, there'll be a run to the dollar as well as the run to gold. And another article on that theme from Bullion Vault: gold bullion is flat year to date versus a strong US dollar as a surge in real rates. See the Nasdaq and Bitcoin plunge. Basically more of the same, talking about, the yields that we have on the tips, talking about the 10-year that's, hit over 3%, and what's gone back and forth there. Natural gas prices, of course, on Tuesday slipped for third session. Russian missiles, all this stuff. Copper prices have rallied, but they're really off. I looked at the long-term chart recently for an update I just did for Metals Investment Forum, by the way. That will be aired. It will be live tomorrow, Sunday, and I am one of the keynotes. I just finished that, and I will be there tomorrow again at the Metals Investors Forum tomorrow on the 15th. Throwing this one up just to kind of look at this, economic affairs from a, let's say, not a traditional Western press. The R word, recession, is coming into play. Why recession risks are rising in major economies. I would say, let's go to D word. Let's go to depression. I really do think we are going into the next greater depression. I don't like to say that. I'm not doing it for effect. I'm not doing it as a fearmonger. I'm doing it as a realist and trying to stick as close to the truth as humanly possible. The reason being, of course, as we all know, we've got supply issues. We've got food. We've got the war. We've got diesel issues, shipping lanes backed up, political uncertainty, wars and rumors of wars, as I just said, a lot going on. So I do believe that, the fact that he points out Google's trends has indicated the interest in the word recession has been spiking. Geographically, the top source of interest has been the United States. Singapore comes in second. Something to bear in mind. And for more traditional source, CNBC, gold extends decline on dollar rally. It's opposite the dollar, blah, 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 blah. Two of the Fed's policy hawks on Friday pushed back on the view that the U.S. central bank missed the boat on the fight against stubborn inflation citing tightening financial conditions that began well before it began raising interest rates in March. U.S. stocks slid on higher U.S. Treasury yields, with the sentiment taking a hit from fears of an economic slowdown in China. Of course, this is worldwide. While gold is considered a hedge against inflation and economic uncertainties, rapid U.S. interest rate hikes increase the opportunity cost of holding the non-yielding bullion. That's pretty much BS. That is what they're going to say again and again as long as they keep tightening, which remains to be determined how tough they're really going to be. Nonetheless, the market will react due to algorithm trading, fear, believing the words coming out of the Fed, etc. Nonetheless, until real rates get above the true inflation rate, it really doesn't affect gold on a longer term basis. And this is switching to silver. This is highlights of the World Silver Survey. That is Mike Dorenzo, Executive Director of Silver Institute. I've known Mike for a very long time. He's been very helpful to me. I really appreciate what he has done for, at one time, the Silver Investor, and now the Morgan Report. So I'm not going to read this whole thing. You can dig it out, but we will go through a few of these points here. And that is global silver market realized growth in every demand category in 2021. Remember, the 2022 category is 2021 inclusive. It's all the data for that entire year. Making the first time all key sectors rose in tandem since 1997. Silver demand. All categories of silver demand strengthened last year, taking the annual total to over 1 billion ounces, an impressive 19% gain over 2020. Industrial fabrication rose 9% to 508.2 million ounces despite global logistical challenges. Silver's use in photovoltaics, which is solar panels, increased 13% to 113.7 million ounces as global solar installations grew. So you look at mine production in 2020 with the COVID, and 2021 with less, increased substantially. Recycling about the same. Hedging, they don't pay much attention to it. Official sales are almost meaningless. So total supply came in at, again, a higher number, close to 1 billion ounces. Demand up, as I just read. Photovoltaics, as I just read. Photography is almost meaningless these days. Plus, it's all recycled. You can just make that a net zero, really. Jewelry increased. Silverware, not that big a percentage of the market, but increased in 2021, according to the Silver Institute. Net hedging, they show a little bit here, and you come out with these total demand numbers. And also the price, this is the average for London, sourced from Metals Focus. You had about a $20.50 versus $25 in 2021, and we are below that now, as you know. Silver investment and price. Physical silver grew 36% to 278 million ounces, the highest level since 2015. What's interesting here is the background on the percentage increase or decrease from last year for ETFs or institutional investing. That is where it really changed from 2020. 2021 was another year of net annual inflows into silverback exchange traded products, ETPs, with a rise of 65 million ounces. Combined, it rose to a record high of 1.13 billion ounces. But if you know what I know, and most of you do, that last year, the previous year, 2020, we were at an increase of 320 million ounces into the ETPs. This time it's about 1/5 that amount. So yes, there was still demand from institutions, but it was rather pathetic or pitiful size-wise relative to what it did in 2020. So I think that certainly has something to do with the price. As I just said, 2021's average price, $25.14, a 22% gain over 2021. Silver supply production grew 5.3%. Outlook 2022, this again is not me, it is the World Silver Survey from the Silver Institute. Geopolitical and economic issues, including the Russian invasion of Ukraine, multi-decade high inflation, lower global growth projections, increasing interest rates present challenges to forecasting precious metals this year. Nonetheless, Metals Focus forecast a 5% rise in global silver demand due to further structural advancements in industrial fabrication, which is expected to achieve another record high in 2022. Jewelry and silverware demand should continue their post-pandemic recovery this year. On the supply side, higher mine production is also expected due to project ramp-ups and some gains in established mines' output, coupled with a rise in industrial recycling to drive a 3% increase in global supply. The trend has been quite substantial on the industrial side, and the investment side ebbs and flows, as I just outlined, relative to 2020, what happened in 2021. Retail continues to pound, stack, and collect silver, whereas the institutions are, for whatever reason, reluctant to come into the silver market relative to the previous year. So just a few more comments and we will close out this weekly perspective. Just want to run through some of the numbers on the metals. And so far now to this point in time, almost halfway through the year, not quite. Aluminum is off 4%, cobalt's up 16%, copper is off 7%, lead is off 11%, nickel is still up 32%, tin is off 15%, and zinc is the big winner, up 80% year over year. That's for the year 2022 from the beginning of the year. Gold is now off 1%, palladium is up 2%, platinum is down 2%, silver is off 9%. The HUI is off 4%, the XAU is off almost 6%, and the dollar is up about 10%. Going into oil, crude is up 46%, heating oil is up 68%, natural gas is up over 100%, and gasoline is up almost 80%. So taking a look at the crypto world, and not to beat up on anybody, but I did the Crypto Conspiracy series for a reason, and that was sort of a public service announcement. Regardless of my views, some people adhered to what we presented, some didn't. I will be doing an update, I think, with John Perez, hopefully next week. So let's go here. This is year to date, as far as I can tell. These are rough numbers. I could be off from the chart I'm using here, but Bitcoin's off 41%, Ethereum's off 50%, XRP's off 70%, Cardero off 74%, Polkadot off 77%, Dogecoin 85% down. So that's some of the leaders. I don't pay attention to a lot of these coins. Those are the ones that are kind of at the top of the list here because of market cap volume and enthusiasm. So I will be back with you next week with another weekly perspective. This is David Morgan of the Morgan Report signing